Alright traders, still no couch and secondary TV or my computer chair yet, so tomorrow everything should be arriving. It's fine though in regards to market analysis. I don't need everything, I just need my screens. So I've got that up and running, and it's been an interesting day to me. It's the US dollar. I think what you're seeing here is that the market is trying to position a little bit towards US dollar strength, not so much against the euro, but definitely with dollar yen. You saw some pretty I don't know, just a little bit weird sort of buying going on through the Asian session, a little bit of support coming through. And remember, the risks are skewed towards this Jackson Hole meeting with Yellen coming out, gaining optionality, right? And with the US dollar at pretty substantial short positioning levels against nearly everything, then the market doesn't need much to rally. And in fact, for the US dollar to sell off is going to be a bit of a tall task, especially with stocks and risk sentiment firming. And you know, while there is still the looming North Korea sort of things, it's not really the the catalyst that will bring down risk just yet. And with Trump, he seems to be able to get away with things. It goes flares up for a day or two, and then the market goes back to I don't know, it's almost like hope in terms of the tax plan being approved or infrastructure plans being approved. But definitely stocks are very, very bullish, right? So you can't be looking at selling risk too aggressively in this market. And what you need to be doing is more just focusing on maybe the bigger picture, which is ECB and Fed expectations, right? So going into this event, not too many traders, I suspect, are looking for ECB taper announcement. So there's this conjecture from a lot of banks, and I've read this a fair bit, that traders are going to be disappointed when Draghi doesn't specifically outline his tapering plan. I mean, but if everyone knows that Draghi is unlikely to announce it here, and probably is going to announce it on the September 7th ECB meeting, what sort of negative reaction are you going to get from that? Much more important is what Yellen says, and she's speaking 3 hours before Draghi, and she's speaking in a format which opens up the door for her talking about asset balance sheet reductions. Right now, balance sheet reductions is a form of tightening without raising rates. It can have an effect on the yields, and the yields are very important. And the difference between the US yields and the German yields are very important, and the difference between the US yields and the Japanese yields are very important for those two pairs. Okay, but given the market's situation here with dollar yen so low, the bigger effect is definitely going to be on the dollar yen, and I would use any sort of US dollar pushback in that environment, and any sort of lack of commentary from Draghi, so any sort of pullback in the euro as a buying opportunity on Friday or come Monday. So what I'm looking for now is a little bit of US dollar pushback on Friday, and then I'm looking for the right sort of price action, whether it's at 117, whether it's at 116.20, but the right sort of price action where we can start to rebuy the euro in anticipation of the market starting to buy the euro ahead of the ECB meeting on September 7th. So I'm no longer really looking to be holding my euro long. Euro yen I'm going to hold long, but I'm not going to hold my euro yen. So I'm taking profit on the euro, and I'm going to hold the euro yen because dollar yen is such a big catalyst for euro yen. If there is something for the market to grab a hold of in a risk on environment, then I do believe it will play it mostly through dollar yen and not against the euro, so that we'll end up with euro yen, pound yen, dollar yen all higher if Yellen says the right sort of things regarding balance sheet reductions and the market responds aggressively. And especially if she leaves the door open for December in explicit terms. If she says something like similar to what Dudley, and they're supposed to be very similar, Dudley and her, and Dudley spoke just last week regarding his stance that future rate hikes are coming this year, are appropriate this year. Something along these lines is definitely what the market will latch onto. Okay, so I have 3 hours before Erebus, but we can check that tomorrow. because we'll be streaming again tomorrow. We'll check a couple of sources to make sure. From what I heard, she was speaking. I heard she was speaking at 12 GMT. Okay, but so we'll look into it. So she's either speaking at 12 GMT or at 14 GMT, and even in those regards, if Draghi's speaking that late, it's going to make it a bit harder because it's definitely be sleeping at that time. But it's still very important, and you know, there's not too many ways in which dollar yen goes up and euro goes down. So euro yen goes down. It would have to be a scenario where the euro falls faster than the dollar yen rises. That can happen if Draghi is somehow come out with a sledgehammer trying to hurt the euro. But since he hasn't been doing that in the last couple of months, I don't think that he will start now on the eve of the September 7th meeting. That's pretty close. That's only a couple of weeks away. If he's got concerns, I think we would have heard them by now. And I think the ECB is sort of accepted, right? Sort of accepted that the market will rally when they normalise their monetary policy. Yeah. So I'll probably be sleeping anyway. But I'm okay to hold euro yen into this event, and I'll be looking at any sort of euro pullback because of euro strength and maybe a little bit of ECB disappointment to be buying the euro on the dip, probably in 117 level. I don't think we get down to 116.20 or 116.50, but you never know. If it happens, it becomes even a better opportunity, in my opinion. Okay, so we'll be open-minded on it going down. Obviously, if we wake up on Saturday morning and the euro's at 118.50 or 119, then Draghi's let the cat out of the bag and the market started to front run. We have to come in on Monday and looking to buy the dip in that scenario, and we will. Yeah, that's because 120 I don't think is going to stop the market if it's in a pre-ECB rally mode. 120 would just be a big figure sort of resistance. It shouldn't really cap it. But you know what I'm wary about at 120 and above going into the ECB announcement is ECB sources linking details or suggesting, you know, tapering might be slower than expected. Now that's very much the ECB playbook. You see heaps and heaps of leaks when they're not happy, and in fact sometimes the lack of a leak, the lack of a clarification from the ECB, if the market moves against it, is an implied acceptance of the move. Right? So we can also read into the lack of leaks as implied acceptance as well. So what else has been happening? A little bit of Aussie selling, a little bit of Kiwi selling, definitely a lot of Aussie Kiwi buying. Aussie Kiwi has become a very fashionable trade in the last 48 hours. I mean, obviously because it's breaking technically higher, but you know, everyone's sort of looking at it now and saying, oh yeah, you know, the Aussie is iron ore is out of rallying and dairy's going down. And there's political uncertainty in New Zealand. We were talking about that way back. We were talking about that at 1.6, and you know, just unfortunately, this market moves so slowly that we sort of closed out all of our trades by the time it got to 108, just because it was taking so long to get up there. Yeah, and this took like 3 weeks here to get a 300-point rally, and although it was relentless, it wasn't so clean, and you know, it's just developing more and more now. Now, a break of 110 does target 113, so don't think that 110 is the end of this rally. You know, we're in a very, very low level here for the euro, so the Aussie Kiwi. This is still extremely low. You know, it spends most of its life between 110 and 130, and so we're not even in the area where it spends most of its life. So it's just having a nice rally here, and it's backed by fundamentals, very good price action, sort of a feeling it's time. A lot of banks, Australian banks, New Zealand banks, are coming out with the same recommendations to buy, and it's early on in the rally, so yeah, it's definitely got legs, and we want to, you know, get involved in this trade sooner rather than later. You know, it's It has the ability to get away from you if you don't watch it, because it will grind higher. Yeah, so pound is actually getting a lot of attention from my clients and traders I know, and they're like, oh, is it, can we buy it yet? And I mean, you know, today it's had a nice little recovery. It wasn't like the data was very strong. It was almost like it ran a little bit stretched and had a small little pullback. I'm going to start watching it a little bit now. I'm going to see if we can start to make some higher lows. Because I don't mind the old buying pound yen trade. You know, I'm definitely into long dollar yen. If Yellen says the right thing, I'm definitely into long euro yen if ECB and Yellen combine. But in that scenario, probably pound yen would go with it. And the pound yen's at really nice levels here. And it's been pivoting now this 140 level. It's just got back above it. So I'm going to be looking at pound a little bit more closely now, because it's such a fast moving pair and you get such relatively easy pips out of it if you're on the right side of momentum here. And so this is the beginnings of a potential reversal, and we just have to watch to see whether that's the case or if another false dawn. It hasn't broken any key levels yet, it hasn't really done anything, there's no real reasoning for the rally. It was just a bit more oversold, so I think you have to be very skeptical still, yeah, but also acknowledge that if it does turn, that pound yen would have such a big potential rally up. 600 pips here is pretty much on the cards if the market turns and starts to buy the pound as casually as it's been selling the pound, because it's been selling the pound really casually. And you can imagine a scenario where the euro is going 120, that the pound would start to go with it as well. I don't think it can be left behind in that sort of environment. The euro has been going sideways, remember, and the pound's been grinding lower, and so the euro pound's been going higher. All right, but without a catalyst, I don't know if you're going to get that that relentless pound selling here just on, I don't know, general weakness. Yeah, a little bit of strength I think would spur the bulls to come back in at these levels, because it is quite low. Yeah, but so far it's just showing small amounts of strength. Let's not get too excited yet. Yeah, but definitely if the dollar yen and the whole yen complex turns, we can have a little look at pound yen. It's not the worst pair to be looking at. You never know. I mean, if the market starts looking for a reason to rally on the pound, it might find a couple of Brexit headlines it likes. I mean, there's definitely a lot of Brexit headlines which aren't making it onto the trading floor because they're all still just negotiation. No agreements have been made. Just little bits of what the positioning, what the negotiation stances are. Let's have a little look at that though. There's a lot of, not a lot, but there's a little bit more research out lately. Yeah, EJ CEDA is definitely one I'm looking at. I'm long Euro Yen, yeah. I think there's many ways that Euro Yen goes higher. I'm looking for 133 here. So, I'm very bullish on Euro Yen, and I think that both dollar yen and euro are going higher here. And unless something changes, i.e. Trump does something more silly, or North Korea does something silly, then Euro Yen's going to be enjoying that squeeze higher as the yen's left behind and the euro outperforms the US dollar. So, I mean, you don't need the dollar yen to rally for the Euro Yen to rally, but it would be great. Yeah, I definitely don't want to see dollar yen below 108. We talked about that last night, that we were watching this sell-off in dollar yen closely to see how far it went. This is nice little recovery that we've got today. And the euro is still, holding close to that 118 level. Although noticeably the lows are getting, the highs are getting lower. But I think it's all just consolidating. It's still grinding higher generally here. So I think it's just more we have to wait for the price action post Draghi. So yeah, I'll reiterate again, I'm looking for a little bit of US dollar pushback, a little bit of Draghi disappointment, then buying into that dip as the market then focuses on the next big thing, which is ECB. And it's very hard for the market not to rally into that ECB. And so the 7th of September gives us all of next week and then the week after to rally. And that's a fair bit of time there to rally with the euro. And if dollar yen is enjoying nice gains because yields are increasing because Yellen was a bit more hawkish than the market expected, then euro yen's going to be berserk up here. So I'm looking forward to that potentiality. It's a trade I've pretty much sold to a lot of traders as well. So if it works out, I'll be a god. If it does not, I'll be the enemy and the fool. It'll be interesting to see how it doesn't work out. Like how could you be wrong? I mean, the way you can be wrong easily is if dollar yen breaks 109, goes down towards 108. In that scenario, then euro yen will struggle, right? Also, if the market is more aggressive on the downside, remember the euro's had a huge rally. If Draghi says the right things, that can get the market to break 117 and then also break. Maybe somehow test 116.20 and not come back up. There is ways that euro yen doesn't work out here, but I am looking for euro yen to be sort of the main way of playing risk on and just general stock market strength and everything being okay. Based on what? Based on what? Which pair there, Erebus? I thought I gave pretty extended rant then on why I think euro's going up, but I mean, lots of banks are putting out reports about what they think of the euro's going to do. I think half of them are split into the camp of ECB's, Draghi's going to disappoint, the euro's going to pull back. Half are in the camp of the the euro's going up no matter what. New Zealand CAD longs, that's like on the face of it a very dangerous trade, right? The Kiwi is the weakest of the commodity currencies and CAD's definitely the strongest. So yeah, I don't know why you would want to buy that. Apart from it being oversold, there's very little reason to be buying New Zealand dollar CAD. And if you are stuck in that trade, then that's unfortunate. And also, I don't have that pair, so I can't help you out with that. But yeah, though, on the face of it, that sounds very dangerous. CAD inflation is quite low. Dairy prices are low, and there's about to potentially be a major new election in New Zealand, and the government's just talked down its GDP, and the RBNZ's jawboning the hell out of the Kiwi, while the Canadian central bank is raising rates. Right? Until that changes, and oil is quite strong. Until that changes, I don't think you can see a trend change. What you can see is a couple of 100-point rally in a short squeeze somehow with the Kiwi, because the Kiwi is notorious for when it turns getting aggressive. But until you see the Kiwi turn, you can't be buying any Kiwi cross. And I don't think you've seen the Kiwi turn just yet. There's a fair few stops building below here. This is pretty bearish. This is yeah. So I wouldn't be touching that just yet. I mean, any trade can work, but you're looking for trouble there. You're definitely looking for trouble there. In fact, if you're going to buy the New Zealand dollar against something, you might want to look to buy it against another weaker currency, because you're basically suggesting dollar CAD is wrong. Oh, that's okay. Yeah, that's aggressively negative. Yeah, that's got room to move down to 87. What is this technical system you have there, Erebus? It's almost cheating, mate. You've got so much information there. Hey, I like that. I like that. You should share the what you're using. If you could, that would be fantastic. If you could share a couple of your indicators, because that's really nice. I like that. Steady Capture's long Kiwi. Okay. Steady Capture likes to buy into oversold trades, yeah. How is he long Kiwi? Is he a long which way? Against the US dollar? That's got a little bit of hope for sure, especially if the euro rallies to 120. Remember, the Kiwi is the highest yielder of the major currencies, right? You know, that's Aussie Kiwi. He's short Aussie Kiwi. Oh, okay. That's a very dangerous trade. I mean, Aussie Kiwis had many false dawns, and there is a High Court decision coming up that may derail the Australian Parliament. It could end up us being in going to the polls as well. Okay, as long as, I mean, maybe it chops around a little bit. As long as we don't go above 110, then there is a bit of hope here. But that seems to me more dangerous than most trades. Yeah, I'm not trying to freak you out. I'm just, I can see the world where that goes to 113 relatively quickly. So yeah, you know, I can understand the sort of where Steady Capture is coming from, but it's fundamentally a dangerous trade. And he doesn't trade fundamentally, so it's okay. Set it up for each currency. The buttons are the breakout of that quick navigation on the 7 cross to see which is strong or weak. Yeah, but you've also got a couple of things here, like this, right? How do you get that to be drawn so cleanly? CAD raised interest rates for the first time in 7 years. That's nice. I like that. If I could get that on my charts, on my MT4 charts, I like that as well. Also, the currency strength meter here, the relative currency strength meter is quite nice. The ATR is nice to have up there. You know, that's nice. Is that a correct ATR on the 50? 180 pips. That's a Sims. Is that the weekly ATR? Okay. It's nice. I like it. Let's talk about the Kiwi though. If you want to talk about the Kiwi, I was reading a report before I came online. Bank in New Zealand. This is not the central bank. This is just a big bank over there. New Zealand's economic expansion is now over 6 years old, and there's no reason to assume it will come to an end anytime soon. Okay, that's solid. Cash rate stuck at 1.75%, where it's been since November 2016. First forecast in the first rate hike to be in August 2018. But the balance of the risk is later rather than sooner. New Zealand Aussie dollar, which is Aussie Kiwi reversed, has fallen, so Aussie Kiwi rised, alongside my short-term model, given the recent outperformance of Australian commodity prices and the toning down of New Zealand rate hike expectations. The fundamental shift needs to be respected, and our Kiwi Aussie projections have been downgraded accordingly, alongside a material upgrade of NAB's AUD forecast. NAB is the bank which owns this bank. They're looking for range trading 91 to 95. That's 105 to 110 on the Aussie Kiwi. Commodities. We remain optimistic for the overall commodity outlook, but note the modest downward correction from current levels. How's it look likely? I mean, the fall in dairy has only been small, but it's a relativistic change, right? Reserve Bank's in no hurry whatever's to move, and it's still forecasting to be on hold until December 2019. That's probably unlikely, but the RBNZ is trying to talk down the currency, so they keep on being very, very neutral. We believe the New Zealand dollar will weaken through the end of the year as the Fed delivers on a tightening cycle. Weakness against the euro is also expected. Positive relative economic and commodity performance should deliver some New Zealand dollar appreciation against the Aussie. Okay. So they think that iron ore is going to stop rallying, which is something I worry about. That's definitely a way that the Aussie Kiwi can fall, because a lot of this is driven by the iron ore rally. If that was to reverse, and let's bring up an iron ore picture, then you would see Aussie Kiwi reverse. So this is since June, 50% rally. So if it does go back down, and it's pretty choppy, then you will see you will definitely see Aussie fall relative to the Kiwi. We don't want to get into the Bank of New Zealand's ideas about the euro. We will look at HSBC's review though, because HSBC, I really do I rate these guys. Dollar yen reversing, it's definitely, looks like the smart money is trying to position to be long. Right, now why are they trying to position to be long here? They're trying to position long if Yellen surprises, which won't be a big surprise, but the market's been so heavily selling dollar yen on multiple reasons that if Yellen does open the door to December rate hikes again, that it's got a lot of room to move. You can imagine if it breaks 110 how aggressive the short covering would be as well. But I prefer to play it via Euro Yen. That's the way I like to play it. Market's going to be alert for comments on the Fed's balance sheet plans and how the Fed views recent downside surprises to inflation. We believe Draghi is unlikely to break major new ground on near-term policy outlook. Any comments could be aimed at preventing a further rise in the euro rather than providing anything hawkish for investors to latch onto. So that's pretty much my view as well. There's many ways in which the US dollar gets stronger, a couple of ways in which the euro goes down slightly. Nothing much there. Bit of focus on on Yellen. We expect any introductory comments from Michelle to touch on two key topics: Fed's intention to begin shrinking the balance sheet relatively soon, and the slowing inflation in the past 4 to 5 months. The Fed's expected to announce their balance sheet program, right, on the 19th and 20th. So September's becoming a huge month. And September's a pretty known month for stock market weakness. So, you know, I think September's going to be a cracker in terms of volatility. Which would be good for us because we haven't had much. This is ING's little report. Pound, when cheap is getting even cheaper. You know, that's what it feels like, isn't it? Just relentless selling in the pound. We'll see today if it can hold the gains and start to show a little bit of gumption. If there is a little bit of a pushback with the pound, then we can start to look at ways to buy it. A pound yen, just it screams to mind that pound yen is the way to look at it. And it has such a sharp move when it does move. So we can look at that later. Tomorrow maybe, or Monday. Monday might be the best time to be looking at everything. Yeah, so they're looking for limited movement today because of the big announcements coming tomorrow. And probably that's the case, right? The rally you've got in dollar yen already is pretty sharp, and probably why is because the sellers are worried that you're not getting that follow through. Trump's comments about shutting down the government seem to have been already discounted by now. Alright guys, so we will do a bit more review tomorrow. I don't think there's too much to harp on about today because we're all in waiting mode for tomorrow's price action after the speeches. And with little economic data to come out between now and then, there's little to focus on. But it is interesting, the dollar yen's sort of positional adjustment here. And it's also a little bit interesting that the pound's showing some strength here. Let's see if that can continue for more than a couple of hours. You'll notice that the pound hasn't been able to rally for more than a day for a long time. And so the pound, don't get too excited by the pound having a slight little rally here. But it is, you notice it, right? And if there is reasons to be long dollar yen and the pound showing better price action, then we can jump across the pound yen. Just quickly finish, look at the euro yen, the euro pound. Yeah, it's a bit too early to call the euro pound top, isn't it? Yeah. Alright guys, if there's no pairs you want me to look at, we'll be back tomorrow. Best of luck with your trades. Trade a little bit safe here. No reason to take big positions before tomorrow's speech. And definitely just look to react to what is said at tomorrow's meetings at Jackson Hole.